Welcome back, everyone, to another deep dive. Today, we're jumping into an explainer that, honestly, completely redefines what it means to be a traditional business right now. We're looking at the absolute blockbuster, and I mean blockbuster, Q1 2026 performance of Comfort Systems USA, ticker symbol FIX. Now, if you think you know the HVAC business, heating, ventilation, and air conditioning, you are definitely going to want to stick around for this one. Because the numbers this company just put up, they are literally breathtaking. And the strategy behind those numbers is an absolute masterclass.
Right off the bat, we have to ask the obvious question. How on earth did a traditional mechanical and electrical contracting business, a company dealing in, air ducts, pipes, and wires, how did they achieve these explosive tech-like growth metrics? I mean, usually, when you see a company doubling its earnings in a single 12-month period, you're looking at a flashy software startup, right? Or maybe some viral consumer app. You definitely do not expect to see it in commercial plumbing and electrical work. But Comfort Systems USA did exactly that. Let's look at the raw numbers to see just how massive this leap really is.
Okay, let's look at the top line first. In the first quarter of 2026 alone, Comfort Systems pulled in $2.87 billion in revenue. Just let that sink in for a second. To put it in perspective, in the exact same quarter last year, they were at $1.83 billion. So we're talking about a massive 51% organic growth rate year over year. I mean, just think about the pure logistics of that. Scaling a physical, highly labor-intensive construction and engineering business by over $1 billion in one single quarter? That requires unbelievable operational execution and, more importantly, an absolute tidal wave of customer demand.
But here's the thing. It's not just the top-line revenue growth. The bottom line is where this story gets really wild. Take a look at their Q1 2026 earnings per share. It came in at a staggering $10.51. In Q1 of 2025, that number was $4.75. So they didn't just grow their earnings, they significantly more than doubled them. What this tells us is that this huge influx of new revenue isn't hurting their profitability. Actually, it's the exact opposite. As they scale up, they are becoming way more profitable on a per-share basis. And when we zoom out to the complete financial picture, it gets even better. Just look at the gross margin line here. It expanded from 22% all the way up to 26.3%. Now, in the commercial contracting world, a jump of over 4 full percentage points is massive. It shows they have incredible pricing power right now and are executing these projects with extreme efficiency. And then, check out the operating cash flow. Last year, they burned through $88 million in cash to run the business in Q1. This year, they generated $388.8 million in positive operating cash flow. We are literally watching a fortress balance sheet being built in real time. So what exactly is causing this crazy margin expansion?
Well, here is the core driver. The secret sauce isn't just that they're doing more work, it's the kind of work they're doing. Comfort Systems has made this incredibly strategic, highly profitable pivot into complex, large-scale data center construction. Think about it. Data centers run hot, really hot. To keep all those servers from melting down, you need sophisticated, heavy-duty cooling systems. And Comfort Systems? They just happen to be the premier experts in exactly that kind of specialized mechanical engineering. They aren't just hooking up AC in standard office buildings anymore. They are literally building the cooling engines for the internet.
You can really see this pivot show up in their revenue mix, too. Historically, their technology-related projects hovered around 32% of their business. But recently, leading up to these massive 2026 numbers, that mix jumped up to 42%. Nearly half of their entire income stream is now tied directly to tech infrastructure projects. They've essentially morphed from a general commercial contractor into a specialized tech infrastructure powerhouse. And honestly, this mix shift is exactly why those gross margins are expanding so fast. These are mission-critical, highly complex projects, and because of that, they command absolute premium pricing.
And look, this demand, it's not a temporary spike or a flash in the pan. We are looking at massive, long-term structural drivers. We're talking about the explosion of artificial intelligence, the endless expansion of cloud computing, massive data processing needs, and broad digital integration. Every single time you use a new AI tool, there is physical hardware in a massive facility somewhere that needs an immense amount of power and cooling. These hyperscale cloud providers are currently pushing local power grids to the absolute limit, and they're facing major shortages in skilled labor. They desperately need Comfort Systems specialized teams just to get these massive data centers online.
Now, if you're asking yourself, okay, but how sustainable is this really? Well, let's look at their backlog. In the construction industry, your backlog is basically your crystal ball. It's all the contracted work that you haven't completed yet. Back in Q1 2025, they had a very solid $6.89 billion in the pipeline. By the end of 2025, that had ballooned to $11.94 billion. And here is the craziest part. Despite burning through a record amount of work in Q1 2026 to hit that $2.87 billion in revenue we just talked about, their backlog still grew. It hit a record-breaking $12.45 billion. They are literally signing new, massive contracts faster than they can physically build them. That is the true definition of a long-term growth engine.
And the leadership sees it too. CEO Brian Lane really hit the nail on the head in their recent earnings release. He said, and I quote, "Considering recent bookings, underlying persistent demand, and our strong pipelines, we are optimistic about our prospects for the next several quarters." End quote. Management is basically flashing a giant green light to the market here, signaling loud and clear that they don't see any near-term slowdown in bidding activity. The demand, especially from the tech sector, is just incredibly robust right now. Of course, when a company is scaling this aggressively, internal stability and corporate governance become absolutely critical. You need the right people steering the ship. Comfort Systems has been very proactive about mapping out their leadership for the future. Moving into 2026, Trent T. McKenna, who was already the COO, was elevated to president and COO. We also saw a really smooth baton pass in the legal department. Longtime General Counsel Laura F. Howell retired at the end of 2025, transitioning into an advisory role, and Rachel R. Eslicker was officially promoted to take her place. This is a great sign. It shows a company that isn't just chasing explosive outward growth, but is actively fortifying its internal leadership to maintain operational excellence.
It's also super important to realize that Comfort Systems isn't just getting lucky in a vacuum here. This is part of a massive macroeconomic wave. If we look at their peers, the signals are absolutely identical. Take Sterling Infrastructure. They just reported that their data center revenues surged 125% year over year. Or Quanta Services, who are explicitly pointing out massive secular tailwinds in AI, data centers, and grid modernization. So this proves we are sitting right in the middle of an industry-wide supercycle. The whole digital AI revolution, it requires a physical, concrete, and steel revolution to actually make it happen, and these infrastructure companies are the ones making it a reality.
And wow, the market has absolutely caught on to this transition. Over just a 6-month period, fixed stock has surged an incredible 105.6%. Because of this massive growth profile, the stock is currently trading at a premium forward price-to-earnings ratio of 36.63. So investors are definitely paying top dollar for this stock right now. But they're doing it because they're pricing this company with a premium that's usually reserved for high-growth tech stocks, rather than strictly valuing it as a cyclical construction firm. The market finally recognizes just how deeply entrenched they are in the AI boom.
Which brings us to our final takeaway for this explainer. As the physical, nuts and bolts reality of traditional infrastructure collides head-on with the massive digital ambitions of the AI boom, you have to wonder, is this ultimate pick-and-shovel play really just getting started? Comfort Systems USA has proven, without a doubt, that they are the hidden beneficiary of the greatest technological build-out of our time. The big question now is, can their execution keep pace with that unbelievable $12 billion backlog? It is a truly fascinating convergence, and it's for sure a story we'll all need to keep tracking. Thanks so much for joining me on this explainer, and as always, keep learning.